Today we returned from a HALiday weekend. Get it? HALiday? I know. I was really stretching for that one. Well, I'm going to talk about Halliburton today, so maybe that explains it. Yeah, I know, that was pretty lame. Since we're coming out of a holiday weekend, and today is a bank holiday in many countries, the market was kind of thin. So there's not much to analyze today, but I did find a couple of things to look at, so today's video is going to be a bit shorter than usual. Crude oil popped on big volume today. As I mentioned before, I thought maybe Friday's volume was low due to the holiday weekend and the contract close. Price is still in the bearish wedge up in here, so just watch that. The British pound US dollar is still in the support zone right in here. Just pushed just a little bit lower, but on really small volume, you can see. The volume is still dropping in this triangle. This is a descending triangle, and I'm anticipating this to break down, but the volume is still dropping. So remember, we're going to look for a close below this level right here, but we got to get a volume pop above the average somewhere up in here. So remember, look for a close below the zone with big volume to short it. Tesla still can't find support from the bulls with this drop on big volume today. Everyone's anticipating a bad earnings report, so we'll see. I'm just watching this for now. I'll formulate a plan after this earnings report comes out. Okay, and today we're going to be adding Halliburton to the watch list. For those of you unfamiliar with Halliburton, it's an American company and one of the largest oil field service companies with operations in more than 70 countries and employing approximately 50,000 people. It's a component of both the S&P 100 and the S&P 500. So their earnings report came out today, and as far as I can tell, it should be pretty much positive news. They reported first quarter earnings and net income rose from last year, but apparently adjusted earnings fell. But it still topped expectations. So price slipped in the pre-market a little bit. This is the reason why I stick to chart analysis. It's really hard to figure out what price should do. You would think that's a positive thing. You would think price would go up on this, but you know, I firmly believe the whole story is in the chart. And I mean, you have to still anticipate price moves due to news events and so on, but I like to let the chart tell me what to do with the stock. As usual, I start with the weekly chart, and I added the horizontal support and resistance levels, 1481, 2117, 2766, 3117, 3830, and 4207. But I also saw this huge, well, higher lows, basically. I was going to say a huge uptrend, and it was an uptrend up until 2014. But it's making higher lows. It is no longer making higher highs. So consequently, we've got this triangle that's formed now from these higher lows and from these lower highs. Okay, so as you know, a triangle is a consolidation. And you can see that the volume has pretty much just dropped off during the course of this consolidation with a little bit of pop right down in here. And we'll talk about that in a second. One thing that I thought was interesting was I noticed these volume spikes happened on bearish moves. So it seems like every time there was a real volume spike, it was on bearish news. You can see all of these are red, and they would show up green if it was on bullish not news, but on bullish candles. So I thought it was kind of interesting that, I don't know, it seems like the market likes negative news or something. So let's drill this down to the daily chart. You can see on the daily chart right in here that this is the trend line, the weekly trend line we just looked at. Halliburton's popped up and retested this broken weekly triangle, the purple line here, and is now forming a triangle on this daily chart. It's forming the triangle with reduced volume, reduced volatility at the same time. So that just suggests that the traders are just getting bored with this consolidation right here. Then we see the pop in volume right in here on Wednesday and Thursday's price action, and I assume that is just anticipation of the earnings statement. The earnings statement comes out today, and we get huge volume on today's bearish candle. Price gapped up in the pre-market and then dropped like a rock. So it looks like traders were expecting this to go short. As usual, don't get biased, okay? I'm thinking short, but I'm going to wait for a strong move on big volume before I do anything with this. But do keep your eyes on it. And now it's time for today's trading maxim. Tim's trading maxim number 26. When you're about to give up, think about why you started. Up until 8 or 9 years ago, I'd given up trading at least a dozen times. But it didn't take me long to remember each time why I started the journey. For me, I wanted to be in a business that I could operate from anywhere, and I didn't want to have to deal with clients. You see, I was a software engineer and an entrepreneur, so I was dealing with clients all day long, and some of them were not pleasant. In fact, I had what I internally called my aspirin factor. If it turned out that I expected a client was going to be a headache, I added a 20% aspirin factor to my quote so that he would pay for my aspirin if I was going to put up with it. Trading allows me to travel and associate with people that I enjoy. And as usual, this applies to everything in your life. Figure out your big reason for being a successful trader, and remember it when you want to pitch your computer through the window. If this video has been helpful to you, please click the thumbs up below. And thanks a lot for subscribing. Thanks for watching. Have a great week, and I'll see you next time.